The general view historically was that when it came to environmental social governance, ESG and private equity secondaries, you just couldn't do very much. You had limited influence. Of course, there's an element of truth about that. Secondaries investors are removed from the level of the assets within the funds of underlying general partners. They do not manage the assets. While the analysis and consideration of relevant ESG factors is an integral part of our risk-adjusted approach to investing, being removed from the underlying assets means our focus is mainly on influencing the managers with whom Coller Capital's funds are invested.
Our approach allows us to ask the right questions during the diligence phase. We're able to interpret the answers to form a view, and we're able to present that in investment committee with a full interpretation of how the ESG influences the company.
There are many situations where you do have influence, can ask more questions and collaborate. We're more than happy to share views, experiences, and contacts with the wider industry, notably through partners such as the Principles for Responsible Investment, the Fair Investor Initiative, and the Carbon Disclosure Project, CDP.
We influence through a combination of formal and informal mechanisms. Side letters have always been a tool in our industry, and for us too. But we find we get more traction through dialogue, exchange of information, and building trust with the general partners with whom we're invested.
We exert influence through contributing to thought leadership, through industry guidance, through our surveys and reports, through formal investor engagements, and through collaborating with peers and colleagues from across the industry.
And there's also influence through post-transaction engagements, such as through our ESG survey, through notes on specific ESG topics that we circulate to managers and companies, and through more focused and specific engagements, such as workshops that we hold with general partners or individuals that underline managers.
It's our belief that ESG focus and sustainability can be improved upon at any company, that it is a journey irrespective of industry sector or GP investment mandate.
Many talk about integrating ESG into the investment management process, but what does that mean in reality? For us, it means integrating experienced ESG professionals into deal teams once a transaction goes live, but it also means subjecting every investment to an ESG analysis. And so this means focusing on the risk areas. It means drawing from third-party databases, but it also means building on institutional memory and the experiences that we've had in the past, looking at similar companies and the ESG factors that we've experienced there. On a live transaction, our focus is really on understanding the true nature of the companies and the assets in question. Layering in the perspective of ESG allows us to focus on areas of opportunity and risk that we may not have covered in our initial work. This allows us to form a holistic view of the companies, allows us to form a view on the risks, and better informs our investment committee decisions when we come to the point of recommendation.
Our ESG policy and processes are always under review and evolving. We're always thinking about better ways of screening investments and using the data we have, better ways of presenting that data at investment committee and for investors. Like many firms, we are mindful of the climate crisis, and we're playing an active role in responding to the needs of our stakeholders in respect of carbon and the wider need for private equity as an asset class to respond to the climate crisis.